Hello, we now welcome you to part 2 of this pre-scene analysis. So, being CIMA registered tuition providers, we thought let us help our students a little bit more in giving you details about how our pre-scene analysis actually works, the level of detail here. So, you've already seen part 1. Now we introduce you to part 2, which is a whole lot of detail, a very extensive analysis of the pre-scene, which is vital for your strategic case study exam. So let's begin where we dropped off. We now speak about the next part, which is transport infrastructure. Now, airports obviously require extensive transport links for people to reach the airport or get out of the airport back into the city. Passengers and their baggage will arrive and depart throughout the day. Airports and their associates also have large number of employees who work in shifts and they also need to travel to and fro. So connection for an airport is very important. So when we go forward and speak about the operations of our company Arrfield, we'll see, do our airports have a good connection? Because that is vital, right? Most airports have good road access and large car parks. Now, in this case, the government becomes an important player, important stakeholder over here, because government support and collaboration will be an important factor over here, because the roads, the infrastructure, the approach roads, the approach services are provided by the government, right? So the government becomes an important stakeholder as part of your business. These are often major sources of revenue, with many passengers driving to the airport and they'll pay to park at the airport. And this is one of the major sources of revenue for an airport. Sometimes airports will charge you premium prices when you park close to a terminal. If you park away from the terminal, you're charged a little bit less. So, airports also offer a variety of ancillary services or extra services to increase and boost their revenue. For example, parking or premium parking. Airports also offer other forms of ground transport such as taxi ranks, bus stations, and railway stations. These generally offer services to the nearest major towns or cities. Some airports have major bus and rail stations that enable long distance journeys on national public transport networks. Airports also require significant road links to carry goods. If it's a cargo terminal, it needs good roads so that a truck can move in, move out. Because also aircrafts need fuel, so for the fuel to move in, move out. The airport also requires goods, including inventory for the duty free shops and other materials to run an airport. So, transport infrastructure is key for an airport. Moving on, I'm speaking about logistics, which is also important. Now, airports require extensive and sophisticated logistical support. Flight operations require that airports are equipped to refuel and resupply aircraft before they take off. We already know that. Apart from fuel, lubricants, and other consumables, most long haul flights require stocks of food and beverages. All of these also needs to be transported, right? Airports must be equipped to meet these requirements in an efficient and cost effective manner, because at the end of the day, the airport operator is a business. They need to make a profit. So, how can they handle the entire logistics system to make sure it's cost effective? That is something that should be running through your mind. For example, most large hub airports have underground pipes that carry fuel to aircraft stands, thereby avoiding the need to fuel for the fuel to be carried in tankers, and then the tanker loads the fuel into the aircraft. So all of this again becomes part of your airport design. Next, hub airports that operate long haul flights usually have industrial kitchens that can mass produce hot meals. So, on site itself, you'll have industrial kitchens. These are generally leased to specialist third party catering companies and so offer a further source of revenue. What you do is you make that kitchen space available, you lease it out to a third party, and then you offer that food to airlines. So you are opening up another source of revenue for you. These kitchens must prepare the meals in accordance to each airline's menu. The meals must also be prepared so that they meet strict hygiene requirements. Passenger baggage requires sophisticated arrangements to ensure that each bag is loaded onto the correct aircraft. If the wrong bag is loaded, it could be a big issue. So, these are again one of the many risks that I'm trying to identify while I'm going through the pre scene. Moving on, baggage has to be unloaded from arriving aircrafts and transported to the appropriate arrival halls so that the passengers can collect their baggage and so there is less waiting time and less congestion. Again, customer service is important in this industry. Baggage from arriving aircraft creates a further complication because sometimes there are transit passengers as well. So you have to transfer their baggage from one flight to another, and it has to be a correct flight. So there is a whole lot of complications in this industry that needs to be looked at. Items of baggage are tracked using standardized labels. The barcodes on the labels conform to international standards, which means that they can be scanned optically by the equipment used at the airport. The barcodes identify the owners and also the flight numbers from the point of origin until the final destination. So as you can see, this system is a very intricate system, and it has to be very seamless, because if one thing goes wrong, it's going to be a stack of dominoes and it could be a big problem for the business to function correctly even if one system malfunctions. Now, in addition to the passenger baggage, most airports provide air freight facility as well. Large airports often have warehouses that can be used to expedite the shipment of loads. So you can see you'll need a vast piece of land, vast infrastructure, very good seamless software systems for this entire airport to work. Air freight is often used to transport high value items, particularly because of enhanced security and partly to avoid tying up the cash in expensive inventory while it is transported by land or sea, because obviously air travel is faster. Now, these are the major points the air freight industry markets upon. The air freight industry works because there is absolute security and there is fast transport of goods. So, if you are looking to enhance the air freight terminals or air freight business at your airport, again, these are the things that you can look to market upon. Because if customers demand air freight, automatically the demand for your airport operations goes up. So when we go to our company's analysis, we will see whether we offer air freight facilities, whether we have a terminal for this air freight cargo. If we don't, we can suggest this as a method of expansion because it's really coming up. Perishable goods also, such as seafood or exotic fruit, are also transported by air freight. There are also specialist shippers, such as companies who transport valuable livestock including racehorses by air. So these are very valuable assets, I would say. And because they need maximum security, because they need to be transported quickly, air freight is possibly the only option for them. So we move on and we speak about freight again. So some freight is carried on specialized cargo. These carry large loads and relatively bulky items, but do not have seats for passengers. They are freight planes. Freight is also carried in the baggage holds of airliners alongside passenger baggage. Couriers and postal delivery companies also use both passenger and cargo aircraft to carry packets and documents. So, a range of revenue generating opportunities open up in this business segment where you can increase your revenue by offering cargo facilities, freight facilities, and passenger airlines, as well as specific freight airlines. Now, all of these facilities that we spoke about ensure that an airport is a complex system of many processes being run simultaneously, and one problem leads to a domino effect. Hence, proper management along with controls being put in place are vital. So, your entire syllabus of internal controls, internal audit from your P3 syllabus becomes very important here. All of these controls and facilities needs to be continuously updated, highlighting once more the capital intensive nature of this particular industry. And again, because it's speaking about capital intensive, this can give rise to financing related queries, bringing in your F3 syllabus. We will discuss about this a bit more as we get into the company analysis. Remember, until now, there we are only doing a industry analysis, which is part of the pre-scene. They are only telling us what different operations an airport operator has to carry out in the airport operations industry. We have not spoken about Arrfield yet. We have not spoken about the operations of Arrfield yet. Also, now we move on and we see a revenues discussion. So what are the major revenues that any airport operator earns in this airport operations industry? So majorly you will see that the revenues that an airport operator earns is aeronautical revenue. That's 56%. Non-aeronautical revenue is 40%, and non-operating revenue is a small 4%. So what is included in this aeronautical fees or aeronautical revenue that we earn? First is landing fees. So a charge is made every time an aircraft lands or takes off at the airport. Landing charges are affected by the size of the aircraft and the time that it will spend on ground and the facilities that it will use. So that's your landing fees. Then there are passenger charges. Airlines must make a payment for every passenger who arrives or departs on one of their aircraft. This charge is generally usually combined with your landing fees. Also, part of this aeronautical revenue is the terminal fees. So, airlines must pay for the use of terminal facilities to board and disembark your passengers. Some major hub airports have more than one terminal, one of which may be leased in its entirety to a single airline. So, let's say I'm a big airport operator, I have three terminals X, Y, and Z. So, I will say that my Z terminal will only be used by X airline because that airline is so big, it generally only uses my terminal for all takeoff, all landing. That also does happen. That enables the terminal to be branded in that airline's colors and makes it easier for transit passengers who are continuing with the same airline to change planes, because everything by that airline will be through that terminal only. So it's easier for the passengers as well. Airlines with a smaller presence might have a lease that grants sole use of one or more departure lounges and their gates within a terminal who cannot afford an entire terminal. They have lease contracts where they have the sole use of one or more departure lounges and their gates within a terminal. Again, that allows for branding and maybe cost effective if the airline has several daily flights from that particular airport. Finally, an airline might simply pay an hourly rate for the use of a gate for the duration of the time spent on the ground. If you don't want to make this lease agreement also, you can just pay by the hour. Airports typically charge these aeronautical fees in their home currencies. So if my airport is in X country, I will only charge in my home currency. So we are passing on the currency risk over here to the airlines. You are not accepting any currency risk. You will say, this is my currency, pay me in dollars, for example. Pay me in dollars only. I don't want payment in anything else. So you are eliminating the currency risk from your side. Some big airlines may agree and some may not. Some will choose to work with probably another airport operator because they are offering flexible currency payments. So again, currency risk management is something that we might need to look at. Typically, revenues from aeronautical fees are insufficient to cover operating costs in their entirety. Most airports rely on non-aeronautical revenues to take them into profit. So for the airport, out of the complete 100%, a big chunk is aeronautical revenue. But this is not enough to guarantee the profit for an airport. If the airport wants to make a profit, non-aeronautical revenues are also key. So until now, aeronautical fees were split into three parts: landing fees, passenger fees, and terminal fees. So, what are the non aeronautical revenues which take airport operators into profit? Let's speak about this. So, your non aeronautical revenues are further divided. So, you will see that there are certain, in this pie chart, there are certain parts of the pie which are in green, certain parts of the pie which are in yellow. So the green ones are which are commission based for you. You don't own it, you just earn a commission from it. For example, if there is fuel which is put into an aircraft, you'll make a commission on it. The retailing and dining which happens at your terminals, you make a commission from it. For car parking also, you might be giving it, you might have leased that part to a car parking facility manager, so you are earning commission from it. For car rental also, if there are car rental services which are present at your terminal, you will again make a commission of their sales. On the other hand, there are direct revenues which you earn under the non aeronautical umbrella. The first being advertising. In your airport, if somebody wants to advertise, you take money from them, right? Then there is recharging utilities, there is property and real estate. All of this is your direct revenues. If somebody wants to buy a shop in your airport, it's a direct revenue for you, right? Now these are the non aeronautical revenues which are important for any airport. Now non aeronautical revenues often take the form of commissions paid by third parties. For example, retailers pay airports a commission calculated as a percentage of their gross revenues. Non-operating revenues, on the other hand, which was your third category, we spoke about non-aeronautical, aeronautical. Now the small 4% that remains is your non-operating revenues, which has nothing to do with operating an airport. This includes your interest on bank deposits, any government grants, or any subsidies that you get, and this is a very small source of your revenue. Next concept we speak about is landing slots. So what is landing slot? Now each airport's operating capacity is constrained by the number of landings and takeoffs that its runways and their surrounding airspace can accommodate. For example, if I have one runway, it can only take 50 aircraft. It cannot take more than that. For example, I'm saying. So there is an operating capacity which becomes a constraint for any airport. Even in ideal conditions, the runway itself cannot be used constantly because the airflow from departing aircrafts and the airflow from incoming aircrafts must settle down before the next aircraft can be permitted to touch down. So there has to be a gap between these aircrafts, and that limits your time, limits your operating capacity. That can be a particular problem when a small aircraft is following behind a large one. So again, make sure you're collaborating a list of risks. If something goes wrong and the air traffic control gives a go ahead, then it creates a big risk for you as an airport operator. Also, air traffic control regulations require a safe separation of aircraft both vertically and laterally. That restricts the number of aircraft that can be lined up to land and those who are given permission to land and take off. So there are stringent rules that will be governing this industry as well, because it has to do with public health and safety. Now, as we move on, there is again some standard procedure that is being explained over here. We'll go through it, but you will realize that this is all just normal airport travel standard procedure. Now, the number of aircraft movements that can be scheduled for one day must also be restricted to allow for contingencies. If something wrong happens, something, you need extra maintenance, there must be a time slab that is available. Such as, adverse weather conditions, or some aircrafts require new maintenance that does lead to delays. So you need to be flexible to move around that. Also, the runway itself may have to be temporarily closed to check for debris, check for potholes, check for regular maintenance. Finally, some airports are unable to operate for 24 hours a day because of the noise pollution that it creates for residents nearby. So they need to schedule their flights accordingly. Local regulations may mean that aircraft are not permitted to travel or land or take off between 10 o'clock in the night to 6 o'clock in the morning if you are around a residential area. Some airports have sufficient capacity to accommodate all of the flights that airlines wish to operate from them. It may be that airlines have to collaborate over scheduled arrival and departure times to avoid congestion at busy times of the day. Popular airports often cannot accommodate all the flights that airlines wish to operate from them, and so they have to restrict availability. For example, let's say 30 planes want to get down at 8:30 in the evening exactly. Do you think it's going to be possible even for a big airport? If it's a busy airport, then airports have a system of slots. So, a slot is essentially the right to operate a flight from a particular airport at a particular time at a particular day of the week. This approach to restricting flights at busy airports operates globally. Everywhere around the world, you'll see it. Although each country has its own regulations governing the use of slots, ownership of slots, and all of that. If an airline wishes to start a new passenger or cargo service from a busy airport, it has to apply for a slot. If the airport has a suitable slot available, it is granted to the airline. Once granted, the slot belongs to the airline and not to the airport. The asset is not yours, it becomes an asset of the airline. Airlines exchange slots with one another as well sometimes. They also buy and sell slots. The slots themselves can become very valuable, with individual slots sometimes being sold for millions of dollars. So, if you are selling that slot to an airline, it becomes an extra revenue source for you. Once it's sold off by you, then you cannot do anything because it's not in your possession. But slots are something which is a major source of revenue sometimes for airports. If airlines do not use their slots, then they can be withdrawn and relocated by the airport. If an airline has no further use of the slot, then it makes sense to sell the slot rather than it having been withdrawn, because some slots can be worth significant amount of money. So again, possibilities of revenue generation in this market probably seems endless. There are so many ways you can earn money, you can increase your revenue sources. It's just how you think, how what comes to your mind and what works when you put it at an airport. Next, we are speaking about air traffic control rules. Again, part of the industry analysis. This is nothing to do with our company, Arrfield, yet, but it's important information. So, flights through controlled airspace are managed by air traffic controls, and air traffic control buildings are a big part of an airport operator's, portfolio. These combine radars, computers, and human operators to monitor your aircraft movements. Commercial aircraft are fitted with transponders, which are radio beacons that signal the aircraft's radio sign. Where are they? What the aircraft is doing? When is it going to land? That information is tracked by air traffic control computers and is displayed on the screens that are monitored by air traffic controllers. A small image that I have put over here showcases where the flight has taken off from, what's its route, where is it going, so air traffic controllers can keep an eye on it. Now, safety regulations restrict the number of aircrafts that can be in the same block of airspace. So, your takeoffs and landings have to be managed. Air traffic control ensures that aircraft flight paths do not create any collision risk. The need to maintain safe distances can cause disruption at busy airports, as we already know, especially those which are serving large cities that have more than one airport and so have large number of aircraft in the same vicinity at one time. For example, if I look at London, London itself has three airports, different airports. So when all of these flights take off, they're going to be in the same airspace. And that is why there is a major disruption sometimes. So all of this industry, in fact, is governed by such strong rules, governed by such strong legislations, that it limits your operational efficiency somewhere. Any disruption can become cumulative. One flight delayed, all the others will get delayed as well. Air traffic control might then be forced to delay some short haul flights in order to give preference to long haul flights because they have to go a longer distance. Air traffic control is managed by national governments. So the building is at your property, but it's not managed by your team. It will be managed by the national governments because it's national security. As mentioned, in this industry, government in some form will always be part of your stakeholders, always be part of your day to day. And the biggest way they will be part of your day to day business is the air traffic control. So, the government is a key stakeholder for us. The Norland Air Traffic Control Service is responsible for managing the airspace over the entire Norland and in the skies up to 100 kilometers from Norland's coast. Again, generic information which is being given, but important takeaway over here is that air traffic control is managed by the national governments. So, some way there is some risk which has been transferred. Because if you are managing the air traffic control, then there is so much more responsibility on your shoulders. So, if the government becomes the manager of this air traffic control, some responsibility has been shouldered. So, air traffic control is also responsible for all in flight safety matters. Inside the flight, whatever happens is also controlled by the air traffic control, because obviously, when the flight has taken off, there is no real communication. Pilots can only communicate with the air traffic control system. So, these are the only people who are responsible for in flight safety matters. Airports cannot direct an aircraft that are airborne and cannot instruct an aircraft to take off or land without clearance from air traffic control. They are the final authority. Airports do, however, require constant updates from air traffic control in order to manage operations on the ground. So, again, managing your relationship, which is part of your operations, with the air traffic control to make sure that the entire system is smooth is very important. So, air traffic control can tell you that this flight is expected to land in 40 minutes. So, you can get the gate ready, you can get the fuel tankers ready, you can get the baggage, equipment ready, so that when the flight lands, there are no real delays. To do this, you will need to have a great relationship and a great conversation with the air traffic control department. Now, that could create a number of operational issues, including the need to disembark passengers back into the departure gate area during the delay. So, if there is any big delay, which the air traffic control tells you about, whether it's the weather or it's anything else, it could create big operational issues for you. Because what if, let's say, there's a 3 hour delay and the passengers are already sitting in the flight, they're going to get restless, right? You don't want that. So this can create operational issues, but still you got to deal with it. So flexibility in airport operations is going to be key. This comes with experience and expertise and is important for all airport operations companies like ours, Arrfield. Airports can receive air traffic control data but cannot transmit data to air traffic control. So you can only receive, it's a one side communication. For security reasons, air traffic control requires pilots to update them about the status of their aircraft, such as maybe they need a delay, maybe they need to go early, any technical problems. Relationship has to be good. So now, after finally discussing so much about the introduction and then so much about the industry analysis, so much technicalities, we have finally reached our company's operations, our company's details. So until now, again, I'm mentioning we were only talking about the major operations in the airport operations industry, what the major trends are, what airport operators needs to go through. All of that is what we have done till now. Now, finally, we start speaking about Arrfield. So, all the extra industry analysis that we did at the start and all the industry information that you got as part of the pre-scene now needs to come together to relate to our company and see what we are doing well, see what we are not doing well, see where we can improve. So all of those ideas must be ready in your mind. Let's start. Arrfield was founded in 1980 when Norland's government privatized its airports. So until 1980, Norland's government owned airports by themselves. But in the 1980, they decided that we can allow private companies. So this, our company, Arrfield, was founded back in 1980. Now, what I can say is, if I have been in the airport operations industry for about 41 years, started in 1980, right? This means that I will have some goodwill, I will have some resistance ability, that I've been able to thrive for such a long period, I've been able to grow for such a long period. So this is one of your comparative advantages, one of the characteristics of your business, that you are a player in this market for over 41 years, and this adds reputation, goodwill to your business. Have you seen any business in the whole wide world that has survived for so long without giving any value to customers, without customers not liking their service? I don't think so. So this is the major comparative advantage for us. We've been in the business for such a long time. Previously, the government had owned all large airports in the country. As we know, it was privatized until 1980. Sorry, it was nationalized until 1980. And after 1980, the government allowed privatization, and that's when Arrfield came about. So this was in line with the globalization and opening up of economies, where most airports are now handled by private companies. If you look at any country, if you look at major Europe, US, India, all UK, the other markets, you will see that there are some companies that are multinational but are private and own airports. So it was in line with globalization, and that was the trend at that point of time, and in today's world as well. The company initially acquired Capital City International Airport. So we own Capital City International Airport, which was already one of the world's largest airports for both passenger numbers and cargo handling. So, first and foremost, this tells me that our company has an acquiring strategy. It's not that we are always looking to grow organically, we are looking to acquire as well. So remember, that's a possibility for your company. When you want to grow, you can suggest that, like we acquired Capital City International Airport, we can look at acquiring other airports. On the other side, you can suggest organic growth as well, start building airports from the ground. That can also be a situation. So there is either acquisition or there is organic growth. Also, this line tells us that when we acquired Capital City International Airport, it is one of the world's largest airports. So this is again my comparative advantage, that I operate an airport which is the largest and the best in the world in terms of passenger numbers and cargo handling. But with being one of the largest airports comes more management issues, more capital investment. We already know that. And they over here tell us that we are also dealing with cargo. So we have a cargo terminal, and we know that the cargo industry is also growing. Good sign for me. So they are also telling us that we deal with passenger aircrafts as well as cargo aircrafts. So it's not only one business segment that we are open to. The Capital City International Airport, now referred to as CCI, grew steadily under Arrfield's management. In 2005, the airport built a fourth terminal building to supplement the three existing terminals. So you had three terminals. You were already the world's largest in passenger and cargo handling. You built a fourth terminal in 2005. So what I'm seeing is, you want to capture more of this market. You want to make sure anybody flying from Capital City uses your airport, because the flight is available only from your airport. So I'm seeing a market penetration strategy being followed over here. That's the Ansof's matrix from your E3 syllabus. Sorry. In this syllabus, they have told you your strategies for growth. So one growth strategy which I can see over here is market penetration, because I wanted to enter this market further, consolidate this market further. Hence, I built a new terminal. They are telling us that this new terminal that you build was leased in its entirety to Norfly. Norland's largest airline. So you built the terminal, and that entire terminal was leased by one company, Norfly. They are the largest airline. So this airline now becomes a key stakeholder for us. So stakeholder management comes into the picture again, as they will be generating a significant part of our revenue. They're leasing the entire terminal for us. So dealing with them, communications with them will become also important. Capital city is Noland's capital and is a major population center. It is an important financial center and is home for many multinational corporations and banks. This further tells me that the business people traveling to this airport will also be a possibility. It is also a popular tourist destination, so people also want to travel. And there is a strong demand for flights to capital city. So it's a big airport. Everybody wants to be here because of tourism, because of business. So this is a further advantage for your airport because of the existing nature and demand in the market. This is your competitive advantage. CCI reached its limits in terms of operating capacity in 2002. In 2002, back in 2002, we already reached my operating capacity, which means more than this, there cannot be flights landing. More than the number that we were handling back then, there cannot be flights taking off. We reached our operational capacity. And we've already discussed this in our industry analysis that no matter how big an airport you are, there will always be an operational limitation, because after every flight lands, you got to wait. After every flight takes off, you got to wait. So there is going to be an operational limitation, and we reached that in 2002. It issued slots to enable airlines to continue their existing services. We know what a slot is. No new slots have been available since then because everything's taken up. Airlines wishing to create new flights from CCI must either reallocate their existing slots or buy additional slots in the open market. So you can, you can ask another airline to sell their slot to you. You have nothing to do with it as an airport operator because you have already sold that particular slot. Arrfield has also expanded through the acquisition of existing airports. So like I've said, we are okay with our acquisition strategy. Part of our business strategy is acquisitions, something for us to keep in mind when making a strategic decision. We are open to this. The largest of these is Capital City Max. So this is another airport that we had acquired in 1994. So now we own two major airports in my home country, Noland. This gives me a very strong market position. Now, this was a controversial acquisition because CCI and CCM are the only major hub airports serving capital city. So if you want to go to capital city, you have to somehow use Capital City Max or Capital City International Airport, both of which are owned by you. So people were against it because you have now become a dominant player in the market. There are other airports that serve the city, but they are non-hub airports and are in less convenient location for travelers. So your location is good, your market position is good, it's strong, it's dominant, good for you, but there can be criticism of this. So be ready to deal with it. Arrfield is Noland's largest airport company when measured in terms of revenue and also in number of flights. Market leader. It is the only company serving capital city with hub airport services. So this is a dominant market position while being the market leader, and this is my competitive advantage. This is my business strategy. Arrfield's closest competitor is Skylane, which owns Skylane Capital City Airport, a non-hub airport 50 miles from capital city, and two hub airports in other parts of Norland. So your closest competitor is Skylane, who has a non-hub airport in capital city, and this company also owns two hub airports, but in other parts of Norland, not in capital city. So if anybody in any way wants to reach capital city, which is a popular destination, they have to use your service. Moving on, Arrfield now owns and operates a total of 6 airports. So you are a large company, multinational company, and a company that deals with large passenger numbers day to day. So first and foremost, we have hub airports serving capital city in Norland. So that's the CCI. This is located 30 miles to the northeast of capital city. CCI has 2 runways and 4 passenger terminals. The airport is a hub for Norfly, which leases the whole of Terminal 4. We already know that. A total of 70 airlines fly from CCI. CCI is one of the 5 largest airports in the world when measured by passenger numbers. So in the world, it's one of the largest. It is also one of the world's largest cargo airports when measured in terms of tonnage. So if you look at cargo, if you look at passenger numbers, you have a very dominant market position. Next, you have Capital City Max. This is located 40 miles to the south of Capital City. It has 2 runways and 2 terminals. The airport is a hub for Norfly and for the airline Air Farland. So, 2 airlines that you are mainly dealing with, Norfly and Air Farland. A total of 58 airlines fly from CCM. CCM is smaller than CCI, but is also one of the world's 10 largest airports by passenger numbers and by tonnage of freight. So CCI is one of the 5 largest airports in the world. CCM is one of the 10 largest airports in the world by passenger numbers and by tonnage of freight. So if you look at the top 10 largest airports of the world, 2 of them are yours, are owned by you. See how much dominance you have in this market. Now, I also have some non-hub airports. Now, non-hub airport serving capital city. So, in capital city itself, you have 2 hub airports and 1 non-hub airport as well. So, this is capital city business. So, capital city being one of the biggest business districts, a lot of multinational companies are here. Hence, to serve this, your company has opened a capital city business non-hub airport. So, this is located 6 miles from capital city's business district. CCB has 1 runway and 1 passenger terminal and has 37 airlines that fly from here. CCB is a smaller airport with a short runway and apron facilities that can accommodate small business jets with a capacity of up to 100 people. It provides short haul services to several major hub airports. So, from this capital city business, you can go to and fro to hub airports and then take long haul flights if the business people need to. The size of the airport and its proximity to the business center of capital city makes it popular with business travelers. So what many people will do is fly into CCI, which is your airport, Capital City International, then take a smaller flight and fly to capital city business for a quick, business meeting or whatever, and then just come back. So journey times to and from their offices are short, and the small terminal allows them to arrive at the airport only 40 minutes before the boarding and just catch their flights and leave. CCB's cargo handling facilities are designed to support courier operations. So small courier operations, you are also working with them. Big competitive advantage for you to have this non-hub airport as well. You have another hub airport serving other parts of Norland. So in other parts of Norland also, you have 1 hub airport, which is Hope City International, owned by you. Now this is located 25 miles from the center of Hope City. This is the second largest city in Norland. Hope City is 500 kilometers from capital city, which is your stronghold. HCI has 2 runways and 2 passenger terminals. The airport is a hub for Norfly and also for the airline Air Estworld. A total of 52 airlines fly from HCI. HCI is one of the 20 largest airports in the world in terms of passenger numbers and tonnage by freight. So if you just look at the top 20, you have 3 airports which are yours, owned by you. Now, you also have hub airports outside of Norland. You are a multinational company, right? So, you have Major Link International, which is in the country of Estland. Now, this is located close to major city, the capital of Estland, approximately 1800 kilometers from capital city, and on the other side of the Norland Sea. Estland is a country that went through a period of economic and political transformation in 1990s. And during that period, a number of multinational companies made significant investments over there. So you saw an opportunity that, okay, Estland is growing. Let us take on that opportunity, and you looked at expansion. So this tells me that our company is always looking for expansion opportunities as well. If there is a certain economic scenario that accepts expansion, that is okay with foreign investment, that is good for foreign investment, then your company is happy to take it. So you will be looking out for opportunities. Arrfield purchased MLI in 1998. MLI has 3 runways and 3 passenger terminals. It is slightly larger than CCI in terms of capacity. It's not the largest in passenger numbers and freight. It's larger in capacity. It can handle more people. It can handle more flights. MLI is the main base for Air Estworld, which operates a frequent service between HCI, Hope City International, which is yours, in addition to its global network of flights. So your relationship with Air Norfly, with Air Estworld is going to be important. Next, you also have another airport as part of your portfolio, which is in another country of Farland. This is Prairie Bird International. Located on the outskirts of Farland's Prairie Bird City, approximately 6,000 kilometers from capital city, PBI is one of the largest airports in Farland. It has 2 runways and 2 passenger terminals, and it offers different customer and freight services as well. PBI is the main base for Capon Air, which offers flights across Farland and to other countries in the Farlandian continent. So your relationship with Capon Air also very important. Capon Air, Norfly, and Air Farland all offer regular flights between CCM and PBI. So there is major interlinking with your hub airports, because at the end of the day, they are hub airports from one major city to another, and you own airports in major cities in 3 countries: Norland, Estland, and Farland. So in total, you have 6 airports. For these airports, they are 2 in capital city international, capital city max. You also have a non-hub airport, which is capital city business. You have another 3 hub airports. One is in Hope City International. So this is also part of Norland. The other 2 are outside of Norland: Major Link in Estland and Prairie Bird in Farland. What I would like you to keep in mind is that we have 6 airports, where these airports are situated, what is the status of the airport, what is the main airline that we are dealing with at that airport. That is stuff that we need to keep in our mind. Now, to help you understand further our airport layout, I have a diagram which is part of the pre-scene itself. So to make it easier for you, see that airports serving Norland are 3 airports. You have Capital City International and Capital City Max, which are hub airports. You have Capital City Business as well. Now in Norland, you have Hope City International Airport, which is also part of your portfolio. This is in Norland itself. If you want to look at airfields, we are operating overseas, or airports we are operating overseas. In Farland, we have Prairie Bird International, and in Estland, we have Major Link International. Now, all of these hub airports are offering services to and fro. So your airports are linked to your own airports with the help of various major airlines. And this is going to be a relationship that you will have to handle. Now, Arrfield's board operates out of a head office that is located in a building on the perimeter of CCI. Each airport has its own management team that is responsible for all operational matters. So each and every airport has its own operational team. Capital City has its own team, Max has its own team, Prairie Bird own team, Major Link own team. So what we learn out of this is our management is okay to give out responsibilities. So this is kind of the responsibility accounting principle where managers are given particular responsibility for a certain center or a department. In our case, the management is held responsible for the operations of an airport, and they are judged, or their performance is judged on the cost or the revenues which they can directly control for that airport. So this is just some outlook which came to my mind, some idea that came to my mind. That is why I wanted to share it with you over here. Now, all our airports are heavily dependent on IT systems. Now, even if they didn't tell us this, we would already know because of our industry analysis and because of the operations that are described in this pre-scene itself at the beginning. But since they've told us, we have access to huge quantity of customer data as mentioned in all of the information that we have done above. Privacy of this information has to be primary concern for us. Talk about real world examples here of how data leaks have caused companies to pay millions against lawsuits for not keeping private data safe. This is another risk. So for us, IT systems are a major competitive advantage because how we run our airport, how seamless our IT system is, how much data our IT system receives, all of that at one end, but also our IT system will have customers' data. How do we protect this data? So, looking at cybersecurity framework and a systematic cybersecurity management team could be a step forward for us as we continue to grow in this business. This also identifies your E3 and P3 syllabuses are very important from these aspects. Now, apart from the usual corporate requirements, such as financial record keeping and the IT systems support a host of operational activities. So our IT systems are going to obviously be involved in a host of activities, which mainly are managing the passenger baggage, scheduling the gates for arriving aircrafts, departing aircrafts, making sure passengers can disembark easily, managing the electric locks on all lockable doors. So only people who have access can go from, can go into restricted areas. So as you can see, a variety of functions are done in-house, and hence management over here can turn out to be a complex issue. We already know that operations are going to be, complex. Airport managers aim to maintain good relationships with airlines that they serve, and that may require cooperation between different airport management teams. So, for example, for my company, I have six different airports. If one airline is flying from one hub airport to another hub airport, all my airports are run by a different management team. I know that, right? So two management teams will have to have good communication to be able to serve that airline better and to be able to maintain relationship. So internal communications, internal dealings are going to be an important consideration here. To give you a very simple example, the management teams of both CCM and PBI, which are our airports, will work together to assist Norfly if it encounters a delay or other problems in a flight between the two airports. So, Norfly is our major customer, and hence, customer relationship management will become key here. And for this reason, two of my own airports and two different management teams that will run these airports will have to coincide, will have to cooperate, will have to speak to serve our customer nor fly better. Now these airport management teams must also work closely with regulators such as the air traffic control, obviously, Inefficiency on the ground can lead to delays in taking off, which can disrupt your entire schedule. So inefficiency is something that you got to try to remove as much as you can. Arrfield's airport charge for aeronautical and non-aeronautical services, including commissions taken from retailers in their home countries. So we receive commissions in N dollars for CCI, CCM, and CCB, and HCI. For MLI, our airport MLI, we receive commissions in E dollars. For our airport PBI, we receive commissions in F dollars. So we deal in various currencies, and hence currency risk management will be a key here. We also have assets in different countries. Our airports in different assets are in different countries are my assets. So working capital, additional capital to be raised will also be required at some stage. This brings in your interest rate management, as which is part of your F3 syllabus. So until now we talked about currency risk management that can come up. But because I have assets in different countries and I will need working capital, I will need money in different countries as well. The theory of interest rate risk management and the chapter of interest rate risk management from your F3 syllabus becomes very important for us to know. Now, each of Arrfield's airport is a significant business in its own right, because all the airports that we own are some of the largest airports in the world, and each has its own management team. So know that each airport has a different management team. The board at the head office reviews the performance reports, but are generally in close contact with the senior managers of the airports. So the board mainly is in close contact with senior managers who lead the management teams at different airports. So each airport has a different management team and they need to report to the board of directors at the head office. The airport managers have considerable discretion, including budgets for capital expenditure. Although major investments such as expansion to a terminal building or other strategic decisions have to be discussed and approved by the board. So you have given them responsibility, but it's not complete responsibility. There is kind of an hierarchy which exists over here where the decision is taken at the top. At an operational level means lower level, the airport managers in middle and junior positions are expected to deal with problems quickly and efficiently, and they are empowered to do so. So you are empowering them, which means they have been given a responsibility to deal with these issues, and to make responsible decisions, they have been given the authority as well. Some decision making power lies with them. So this is good for the motivation of employees and is part of modern business methods. That's good, right? For my management teams for different airports, I have given them responsibility and then they report back to the board of directors. For lower level, middle level, I have given them some responsibility to make decisions. They will report to their respective senior managers, and the senior managers will report to the board of directors at the central office. So this is kind of a hierarchical structure which is coming about, but we'll speak more about the structure of our organization as we move forward. Next, we are speaking about airport ownership. So this is some background information really. So commercial aviation started to grow as a major industry in the late 1940s and 1950s. So this airport operations industry in certain developing nations is only now coming up. If you look at certain developing nations which earlier were not very well to do, didn't have a lot of disposable income category people living there, but now if these developing nations are really booming, then this industry is relatively new in that segment. But if you look at prominent market economies like the UK, Europe, and US, the airport or the commercial aviation industry has been there since a very long time. So, what I'm trying to say is, in areas where this industry is still growing, is still in its incubation, you can look at setting up a stronghold. During that initial growth phase, most countries' governments created airports by themselves. So governments owned airports. Air travel and air freight were viewed as important factors in encouragement of economic development. By the late 1970s, these airports were starting to get privatized. That's what your company did as well, right? That's what Arrfield did as well. Most countries, including Norland, sold each airport as an independent entity. So if I sold you, let's say, Capital City International, it was one entity, one company. Every airport at the beginning was one entity and one company. So if I owned 6 airports, I owned 6 companies. There has been a period of consolidation in many countries, with airport operators merging and creating larger organizations. This is what you have done as well, right? All 6 airports are held by your company at with their, I'll say, with their headquarters in Norland. So governments are taking care to ensure that airports must compete with one another. As in any industry, there has to be competition for prices to be low. So I'm seeing that could this possibly be an issue for me over here? Because I own, if you want to go to capital city, you have to pass through my service. So I kind of am a market holder leader. So we are a market holder in Norland and own 2 of the biggest airports in capital city. Is there a situation that can come up where the government asks us to demerge, to spin off, create smaller companies? It could be a big operational problem for us, because as of now we are 6 airports, one company, everything's working smoothly. If you got to break it up, your operations are the same, but the accounting difficulty, the software difficulty, all of that can really hamper my business. So Skylane owns several major airports, including 2 regional hubs. We know that Skylane is our major competitor. They are way smaller than us, but still our closest competitor. Some companies are undergoing a period of economic reconstruction when their airports were privatized. For example, all of Estland's hub airports were purchased by different multinational companies. Arrfield was one of the investors. You acquired your Major Link International Airport, MLI. In some countries, a combination of geography and economics means that some airports remain in government ownership. So there are some countries which are small and still governments or counties will own that particular airport. So if I'm looking at a small local town airport, it will mainly be managed by the county, or the government of that particular small local town or city. Most of the small airports are owned by the cities that they serve and are often operated at losses, but it's mainly to attract business and leisure travelers. Otherwise, who will go there? How will the city prosper? So you still run the airport with limited flights, but that ensures that people are coming in. So the local shops, the local tourism still, blossoms. Arrfield owns Farland's Prairie Bird International Airport, which is an important gateway for intercontinental flights to and from Farland. So you own a very strategically important airport in Farland, because this hub airport is used for intercontinental flights and it's a good gateway to different parts of the world. So what I'm thinking over here is this is first and foremost my competitive advantage. Now, is it possible to penetrate further in this market? Is it possible to gain more market share in this market? Possibly build a new terminal, build a new runway, make sure your airport is better, because there is lots of opportunity, because you are the gateway to different continents from Farland. So, something that's coming to my mind and I want to share it with you. Now we are speaking about the major extracts from Arrfield's annual report. So the annual report that has been published, it's fictional obviously, has some major extracts that they want us to know. First and foremost, they have mentioned the vision. Now, what is the vision statement? The vision statement is where your company wants to be in the future, what you are working towards. So, you want to be the world's best airport company. Your mission is what you currently do, what is your purpose of being, that's your mission. So Arrfield's mission is to create sustainable growth in shareholder wealth, give back to the shareholders, while respecting the needs of other stakeholders, everybody who is interested in the company, particularly our staff, passengers, customers, and communities who live and work alongside us. So, mainly, you want to give back financially and you want to give back non financially to the people who are your key players. That's my mission. That's the reason for the being of my organization. Next, our core values. So, the core values of this company are first, safety and security. Second, delivering on promises. Arrfield takes its financial and brand promises seriously. We deliver on any commitments that we make. We want excellence in all things. Quality is going to be key for us, high quality standards. We are always learning. So we are happy to accept innovations in safe, secure airport operations. And our mindset is one which says we can do that. So our field staff are empowered to deal with problems in a calm and constructive manner. They know whatever happens, they can do it. So, what I want everybody to take out from this is, remember that this is the essence of my company. So, whenever you are suggesting something, whenever you are taking a strategic decision, keep in mind that your vision is to become the best airport company. And you can include this as part of your mock answers. Your mission is to give back financially, plus take care of other stakeholders. Let's say in the question, let's say there is a scenario which says that at some stage safety and security was not given importance, so you can say that this is not a good thing, as it's one of our core values. We must stay true to our core values. So you can use this information very well as part of your mocks if you keep it in mind. So just keep in mind what your vision is, mission is, and what the core values of your companies are, so that when you are suggesting something, a way forward, you can say that one of our core values is always learning. So taking an innovative approach is a good thing for us, or can be considered to be in line with our core values. If you use these technical words, the examiner knows that this person has gone through the pre-scene. Your integration becomes a whole lot better. Next, we are speaking about the board of directors of our company. These are very important people. These are people who run the organization, steer the organization, give direction to the organization. And you will carefully have to remember the names of each director. You will carefully have to remember what each director is good at, what their competency is, and then you will have to use this again as part of your mocks, because at the end of the day we are trying to understand this pre-scene word by word, so that we can write a well integrated mock answer when we get there. How will we use it? I'll show it to you. So first we have Carmeliata Tante, who is our non-executive chairman. So Carmeliata had a successful career as a marketing executive, serving as marketing director of a major quoted engineering company until she retired in 2015. She was appointed to your board in 2017, 4 years ago. Now, what I take out of this is her experience of being a director at a major quoted company and experience in the marketing industry will be valuable when it comes to running the board, which is the job of a chairman, right? The chairman mainly has to run the board of directors, meaning have conversations with executive, non-executive directors, call for meeting, majorly manage the board of directors. That's the job of a chairman. She will be able to do that because of her experience. So now my thought process is, when I'm writing a mock, and let's say I need some information on the board of directors, I'm speaking about the board of directors, I can say that we can have a word with our non-executive chair, Carmeliata, because she is the one who runs the board, who has conversations with the board. So knowing what this particular director's thought process is will be something that Carmeliata will know. So see how I'm using the directors competency, how I'm using the director's name to give my answer a little bit more structure. On the other hand, if you're talking about marketing, let's say you are talking about any sort of marketing opportunity, at the end you can suggest and say that the experience and wealth of experience, in fact, that we have from our non-executive chair Carmeliata about the marketing aspect, it's important that we have a word with her on this marketing consultation and then move forward. So see again how you're writing and just ending your answer in a better way by using director competencies. So just keep in mind, Carmeliata is my non-executive chair. Her job is to run the board, and she has expertise in marketing, and she has been a director of a quoted company. So she knows how all of this works. Second, we have Marcus Yokela. He is the Chief Executive Officer, the CEO. So Marcus is an aeronautical engineer by profession. He worked in a senior technical role for an aircraft manufacturer before joining Arrfield's board as Chief Operating Officer in 2012. So he was the COO, operating officer, until 2000, and he started in 2012. He was promoted to CEO, executive officer, in 2016. So Marcus has worked in the industry. He knows what aeronautics are, how aircrafts work, how aircrafts are manufactured. So he knows all about the operational details, and this is important for a CEO who is running a company, right? He needs to know what the functioning of an aircraft is, and if he has technical background, even better. So his engineering background will help the business cope with any technical difficulties. Also, he has worked his way up in our company and will know all the day-to-day operations because he was the operations officer. Then he became the executive officer. So again, one of the major comparative advantages for my business is that we have a good, well educated, and somebody who has worked his way up in our company, and that is Marcus. So whenever you're talking about how the company is being run, about operations, about any technicality, you can say that the expertise of our CEO Marcus can be taken on board over here, and then just go on writing your answer or just end it this way. So knowing director competencies really helps you build a better answer. Next, we speak about Anna Obaluva, who is our Chief Operating Officer. Now, Anna trained as a commercial pilot. She flew long haul flights with a major airline for much of her career, and she was promoted to chief pilot as well. So she knows how to fly an airplane, and obviously, because you know how to fly an airplane, you know what type of communications you need to keep with the air traffic control. You need to know landing patterns, takeoff patterns, where the flight will, wait. All of this is part of operations. So our operations officer is also someone who will know all of this, who has had first hand experience. So she retired from flying in 2009 and joined Arrfield as chief operating officer in 2017. So as I'm saying, arguably the most important part of our business, because our operations or services that we provide is what defines my business. Her knowledge about freight operations has to be a competitive advantage for my business. Next, we have Romuald Marek, who is the Chief Finance Officer. So Romuald trained as an accountant with a major quoted travel company. He had a successful career, including several overseas assignments. So he's a trained accountant. He has good technical background. He joined Arrfield as Associate Chief Finance Officer in 2015, and he was promoted in 2018 to the Chief Finance Officer. So what I see is Romuald is an expert in his area. Again, this is very important, right? Because finance is an ever-changing role. He has dealt with consolidations and different currencies, making his skill even more useful for us, because I am a multinational company. I am a company that has different subsidiaries, which are my airports. So his experience, again, going to be important for us. Next, we have Heng Chi Shan. She is our Chief commercial officer. So Heng's background is in human resources. She has held several senior positions in human resources during her career. She joined Arrfield as head of human resources in 2013, and she was promoted to her present position in 2017. So this is very important for our business because of the technical nature of my business, because always it's going to be my employees facing the customer or dealing with some issue which might require their expertise. And all of this is the job of the human resource manager, to hire the right people so that they have the technical nature and knowledge to solve problems. Having the right people in the right departments has to be seen as a key for us, and that is what is Heng's job. Until now, we only spoke about executive directors. Now we speak about independent non-executive directors. First, we spoke about the chairman, who was only the non-executive director. She hasn't been given the categorization of independent because she's in material relationship, day-to-day relationship with the organization. So our first independent NED is Martin Harris. So Martin has had a successful career in banking. He retired from full-time employment in 2018 and joined Arrfield. Now, his banking experience can in some way turn out to be important for us, because at some stage, let's say, what if we require a big loan, a big debt that we need to take? So his expertise can come in important for the purpose of communication or liaison with a bank or with the bank that he earlier used to work for. That can be somewhere important for us. Next, we have Hashim El Sayed, who is the independent non-executive director. So Hashim founded a technology company in his early 20s. He has since developed several successful businesses. He sold his business interest in 2016, and then he joined Arrfield's board. So he's a technological expert. So his feedback and expertise will be important when discussing innovations or any technology related matter. So let's say you're talking about an innovation or anything technology based where you want to create a chatbot for your website so that customers can speak to somebody and solve their problems when they're at your terminal. Or let's say there is a cyber security issue, you need to code something, or website development. For any of this, if you're thinking, then just include a line saying we can use the expertise of our NED Hashim to in this technological aspect, and that will be that may give us a competitive advantage, that may give us an innovative idea. Again, knowing director competencies is very good to write an integrated answer. Next, we have Anne Maria, who is the independent non-executive director again. So Anna joined Capital City Council, the organization responsible for managing the city, after she graduated from university with a degree of economics. She rose to the position of director of planning in the city council itself, a government organization, before her retirement. So, her strong connections with the capital city council can be advantages to us. She may know how the council thinks, how the council works. And when you, let's say, want to pass a plan, maybe you want to open up a new terminal, maybe you want to further expand, maybe you want to include a new technology. All of this needs government backing, government approval, right? So this may be possible because of her relationship with the council. It might not be 100% ethical for us to do so, and this is the scenario of corporate political activity, which is not very ethical. But I will not specifically also ask you to suggest it because it's borderline unethical. But when they've mentioned this is the idea that comes to my mind here. So until now, we have spoken about our board of directors. We will now speak about the structure of my organization. And we already spoke about the hierarchy that exists in our organization, which is further evidenced by the diagram that you see here. So there is Marcus Jokela, who is the chief executive officer. He comes at the top. Then there is Anna, who is our chief operating officer. She deals with everything relating to the operations. So, airfield operations, health and safety, repairs, airport security, everything under operations is her responsibility. For Romuald, he is the finance officer, so he deals with finance and IT. Next, we have Heng Chi Shan. She is our commercial officer. She deals with marketing, human resources, customer relations, and public relations. Now, even before I move on, you will see that Romuald is given the job of accounting and finance. Fine, he makes the final decisions on this, but he also makes the final decisions on IT. Now, Romuald is not an IT expert, so now the thought comes to my mind that such a big company, which is so very much reliant on IT for its seamless operations, would it not be better for us to have an IT director who is an expert in IT and knows everything about the IT, technology and how the framework is supposed to be? Because going forward, cybersecurity is something that we will have to think about. Nothing has been mentioned in our pre-scene. So breaking up Romuald's job can be seen as one outlook. Second, Anna's job also, if you take a look at, has dealing with operations mainly, but can we not split health and safety as another department? Because again, that is something which is very important for us. We are giving it a lot of importance in our industry. Now, this was just some food for thought that came to my mind. But if I look at the overall structure, you will see that we have a functional structure in place. Now, seeing the image above, we can say that a functional structure seems to be in place where similar activities are grouped together. Finance activities in one place, operations activity in one place, commercial activities in one place, and that is for creating a degree of specialization. Now, this is generally recommended for small sized organizations who work in a stable environment and do not offer many different kinds of products. For us, we have so many different services, so many different airports. Do you think a functional structure is the best? So, I have put some benefits and limitations of a functional structure right in front of you over here. Go through it, but now start to think, what if we had a divisional structure based on geography? So each and every airport in a different geographical area would be a different division. We can deal with it that way. What if we had a matrix structure? Think of these possibilities, because as the company continues to grow, this may be a direction that you choose to follow, and it may become important for you to also diversify your structure at some stage, because fueling growth, and if there are operational problems in running the company, it's not really going to be a wise decision to stick to the functional structure. So this can be something that we think about. They have gone one step ahead and given us board committees as well. So, what are the different committees that my organization has? And this is exactly and directly linked to your corporate governance chapter in P3. I think it's chapter number 5. So, what they tell us that we have 4 committees: audit, risk, remuneration, and nominations. For each of this committee, we have different directors who are part of these committees. So, let me take an overall view. Now, after looking at all the directors until now, we can clearly see that all of them are highly qualified. Every director that we have is qualified, experienced, and they fully merit their position and appointments. All the directors are relatively new. If you see, most of them are appointed in 2017, 2018. So they would not have 100% background of the company, and may take time to understand the values, the mission of being a director. They may be part of the organization, but becoming a director is a completely different ball game. But they are well qualified to pick up soon. If we look at the structure of the organization, we can see that the corporate governance code pretty much has been honored in every aspect. If you look at the composition of the board, you will see that the board is made up of equal number of executives and non-executives. There are 4 non-executive directors and there are 4 executive directors. On the other hand, the roles of the CEO and the chairman are also separate. Because they are separate, it's a good thing. so that one person does not have all the power at the top. Next, there is a presence of the audit committee, remunerations committee, nominations committee, and the risk committee also. All in all, the company has a balanced board and the right people to push it forward. This is one of our key advantages. And if you look at all of the committees as well, you will see that we have three independent non executive directors part of them. If you look at each committee vertically, you will see Carmeliata is part of that committee. They haven't told us who is chairing the particular committee, who is leading the particular committee. Also, for Carmeliata, they're only saying that she's a non-executive chair. They haven't said independent non-executive chair. They haven't said, they haven't disclosed the nature of her relationship with the organization. So what we can only do over here is assume. If I look at it from as an outsider, I will see that each committee has three directors, out of which they haven't told me who is chairing that committee, but still there are three directors present. And for a big company, the corporate governance code says there must be at least three non-executive directors part of the committee. So we are fulfilling that criteria also pretty much. So all in all, the board is well established. The board is in the right position, right people to push the company forward. So as we move on, they have given us the principal risks that my company Arrfield faces. So they have done a risk analysis, and as part of the pre-scene, they have told you that these are the major risks which your company Arrfield faces. The first risk that they have identified is business resilience. They say that operations from the company's airport can be disrupted in the short run because of a wide range of external factors, for example, weather, equipment, stuff like that. So, how will this risk be mitigated? The airports have developed contingency plans that address many external threats to operations. There are backup systems in place to duplicate the functions of most key equipment. So, over here, they've identified the risk and then they've told you how this risk will possibly be mitigated. The next business resilience risk is that the airport operations depend on the work done by third parties. These range from airside contractors for refueling, supplying meals. All of this is done by a third party. So if the quality lapses, it comes to you. So the airfield company conducts stringent financial checks on all third parties. Key contractors whose activities affect flight operations, there is a background check. All third parties who operate at Arrfield's airport must maintain a satisfactory standard of performance. Next, Arrfield is wholly dependent upon the airlines who use its airport for ongoing provision of its services. There is a relationship between the airline and the airport, always. How is this risk mitigated? Arrfield works closely with its airline customers to make sure they stay with them, stay together. Arrfield depends heavily on its non-aeronautical revenues to enable it to cover all operating costs. So, what is the mitigation? Arrfield generates revenue from a range of both aeronautical and non-aeronautical services. How can you expand? How can you become, how can you expand your aeronautical revenues? How can you expand your non-aeronautical revenues? Always needs to be looked at. Next, there is environmental risks. Now, social concerns about the impact of air travel on the environment always happening. Arrfield is working closely with airlines to minimize the environmental impact. Same way, residents who live underneath airport flight paths are affected by the aircraft noise. So, Arrfield refuses to permit airlines to operate aircraft that create significant noise disturbance. You've done this. You're taking care of the environment as well. Same way, there is health and safety. Airports are inherently dangerous places with significant hazards. So, what are you doing to mitigate this? Staff are required to complete safety training. Third parties must ensure that their staff are well trained, they know the risks. Passes that permit access to operational areas at Airfield's airport will only be issued to personnel who are certified and have completed all the training. So, any person just can't go anywhere. Next, airports are vulnerable to criminal and terrorist activities. So, for this reason, Arrfield's airports have strict controls to let only authorized personnel in. There are strong perimeter fences which are available. All staff must always wear photographic identity badges to be able to, rectify and identify them. Staff requiring access to sensitive areas has to always pass background checks. So these are the principal risks, and they have identified these main three categories of risks as principal for our field. Now, so this now tells me that if I'm looking at risk management, are these the only risks that I face? Why am I limiting my analysis of risk? In today's environment, risk analysis, risk management is the most important categorization for any organization because of the changing nature and globalization. So why have I made a risk report and then identified only three major category of risks? So are these the only risks that I face? So now I was asking you from the very beginning to collaborate a list of risks. So the other risks that I face, you will already have that list ready. That's personal data, increasing flexibility management, changing government policies, reputational risk, litigation risk, staff turnover risk. All of these are real risks that we face. So if we have created a risk report, are we constantly looking at it? Are we upgrading it? Are we changing the risks, or are we looking out for new risks? That's a major exercise that my organization needs to do. So the list of risks that you have made will be useful for you over here.